right, back in the saddle after a long week off of just craziness, just one thing after another. Life gets in the way and takes me out of trading sometimes. So, what happened during that week? Well, I got sliced through. So, this is pretty much, we're talking about from, let's see, June 5th to the 9th worth of trading days. So, literally from June, well, even the Friday before, right? So this is June 5th right here. But the two trading days before, so the Thursday Friday before, is when I was looking. I had some shorts trying to take this area. I had a short trying to take another area, down here, as I know I had the 500. I had a short at the 33 500. I had another short at the 33 750. They both got sliced through like crazy. And if I had one at the 825, that would have worked, but I didn't. Those were all orders that I wasn't really looking at the market. I wasn't really anticipating that it was coming up here. And even if I was, I would have taken this area over here as a support, excuse me, as a resistance area to push it back down, which it did. It did complete a quarter, but not before stopping me out. It would have needed to have been the 825, and that would have worked out. And this is already, but like I said before, June 5th is when that happened, and that was the time I wasn't really looking at charts at all, uh, due to a multitude of reasons that's not pertinent to this vlog. But the long story short, life gets in the way, and it took me out of trading. So, what could I have done? So that after seeing this, definitely the this giant red bar, a 50% retracement on the Fibonacci, it coincides perfectly with the 500. The 500 would have been stopped out. Probably the backup order 425 would have been the one to work. I did not take that, but that would have been the play. The 500 from 33, the 33 500 to 750. The other thing, though, that we're seeing now is we're seeing divergence. Higher high on the price, lower high on the RSI. Simple as that. Think this is because did we cross over into, okay, so the high on this, if you look at this number over here, the high on this bar didn't make it over 34,000. Now it's 33,998. That's 2 points. 2 points is nothing. That could easily be the CFD spread for this market. It could easily be that the actual futures index that this is based off of, or the actual Dow, is it did hit 34,000 even, and that's where a lot of the big institutions and bankers stepped in and are starting to push this back down. We did see a lot of weakening of momentum on its way up to 34,000. In this particular broker, in this particular CFD pair, the USD 30 didn't quite hit 34,000, but we can, it's so close, it's within the margin of like error with the spread and everything. We can say that, okay, the 34,000 is working now. Did I set a trade there? No. Would I have gotten picked up even if I did? No. That's just part of the game. Just catching up on what the broader market is doing. So that's what it looks like on the 4-hour chart. Whenever I take these long hiatuses from trading, whatever, that takes me out of my routine, my normal daily routine. It's good to take a step back and take a look at the 4-hour candle, maybe even the daily candles. This is a little bit. I didn't take that much time off. It was just 1 week, so I don't need the dailies. I only get 5 bars that I didn't see. But even here, the bar that stands out is the giant blue bar that made a new high. That is it. Whenever you have a big movement up, there will always be some kind of movement or correction down. And the 50% off the daily is perfect as well. If you looked at the daily, it would have indicated, okay, don't do the 500 is a little too aggressive. Do the 425. So that would have worked. So what are we looking at now? So if the daily chart doesn't really give me much to work with for what I want to do now. I do have to zoom in a little bit because that's the 1 hour time frame is the sweet spot for me. We see even more divergence. We saw it on the 4 hour. We see more of it on the 1 hour. And I bet if I dive down even further, I don't need to, but if I did, I would probably see even more. So right now, the bars that stand out are the bigger red bars. So this one stood out to me as a bearish engulfing, but it was stopped out. Any short that I would have taken based off of this bar would have been stopped out already, because any stop that would be around the high point and it would have been hit. We also had this zone appear right here, this rally base and then drop, bearish engulfing candle. Kind of, I don't know if some people need it to the high to be above as well, but definitely a strong red candle out with the second one to follow. This is an indication after a divergence that it might push down to make new lows, and it didn't. That got faked out. So there's a lot of fake outs happening. I think there's a lot of if I was more active, I think I would have taken many losses in a row, which I already did. I already took 3 losses of just set and forget orders. That's usually my max of what I'm willing to walk away with. If I'm not going to look at a chart for a while, if I'm just going to leave it and just close my eyes and let something happen, I don't really want more than 3 traps out there that can be hit. And that's exactly what happened. Technically, I got 4 losses in a row. One of them was just an active trade, and then I had 3 traps just pending. All of them didn't work, so that's why my balance is now back down to 750 in order to hit the 900 that I was very close to hitting before. And now I need 2 wins in a row, ultimately, which is fine. It's just part of the game. That's just one milestone to hit. So I didn't want to tighten up just because I was near. And then life got in the way, so that's... now we're hitting the reset button and we're playing the game again. What's the move to take now? Well, there is strong divergence, so I suspect that the price will break down below this. If it breaks below these lows, this little mini support that we have around between the 850 and the 900 over here, I suspect that it'll make its way down with a vengeance, down to at least the 750, and maybe even back down. Okay, so the 500 is way out there. So definitely to the 750. So I definitely, I don't want to be too aggressive front running it right now because it's a little too close for my taste, given all the weakness. So I'm just gonna have a alert near the 750. I can probably even take the 750 if I wanted something out there. Yeah, I'll just take the 750. Buy, go to cancel, 33, 750. Stop loss is 675. I don't know, you could choose a trailing stop loss. Oh, interesting. Okay. And then 34,000 is my take profit, and that is, why is not working? Place order. Okay. I just misclicked. All right, so there's that order. Do I want the 675? That's not terrible. Um, yeah, this area that was tested is not terrible. Usually I do have a backup order, but because there was so much weakness, I'm a little bit wary of that. This is just something that I'm putting out there uh, to just to give a chance, because the momentum is weakening, but the trend is still very much an uptrend. I have to see more. I have to see RSI break down below 40 and then stay there before I'm committed to making a um, trend reversal, a call to say it's a trend reversal. But because it's so close, it's kind of like a 50-50, kind of on the border situation. I don't want to have more than one trap going with the trend, because trend change is easily possible given what we're seeing. To play the divergence for on the short side, I do want a piece of this 34,000. Um, it's one of those. I suspect that I this is one of those things where even if I had the order there, it's gonna be one of those where it just barely teases me by 2 points. Like this candle was the high was 33,998, and it teases me by 2 points, and then it completes the quarter down to the 750. So I have a that just I have nothing to base that off of other than just my gut, but that's what it feels like is going to happen, because it's happened. It's a common occurrence. It happens a lot. But I still want a piece of it, so I'm going to put something out there just to. This is more of like a warm up trade, if you will, just to get back into the rhythm of doing this daily, because I basically took a week off. So I'm putting this out there. This is not a play on the zones because we haven't been here in a while. It is a play on, although the zone is pretty good on the 4 hour. I forgot. You have a drop, base, and a nice drop off of the uh, breaking breaking this area and making new lows, and establishing a downtrend for quite a while before things started to turn around over here. Couldn't make new lows, and it turned around. I bet you there was a divergence on the smaller time frame over here as well, to you know get stuck in this range for a little bit, and then make new lows over here. There's definitely some kind of divergence happening over here as well. I think I caught a lot of this move in May. Uh, this move down here. Anyway, so I like the 34,000 better than the short, better than uh the long here, but I have those two trades out there. I don't have backup orders on either one, because neither one is uh in order for me to double down and have two orders pending, and essentially take more risk, I need to be more confident in the trades. Now, there's a lack of confidence both because of the formations, and also because just internally I've taken some time off. So I don't want to go overboard, because right now I don't believe that uh, I don't believe both will lose. I think only one will even get hit. So I believe if the it's unlikely that I lose both trades here. That I'll take two losses. I will get picked up on one, and um, I'll rephrase. Of course, it can both trades can lose. It can go up really crazy, and then it could go down really crazy, and I'll have participated in none of the moves. But I before I what I mean by that is during the time that I'm paying attention to it, I will only see one loss. I will only see one loss before I come back to take a look at the trade. So within the next 2 days or so, I don't believe it'll go up sharply and down sharply, unless there's some kind of black swan event that nobody saw coming, that some kind of calamity that just changes the markets fundamentally and just makes it go up and down like crazy. Um, barring any kind of those extreme events, I don't believe we'll have any. I don't believe I'll be surprised. But if I did a backup order on either one, I could be surprised. I could take two more losses in a row, and that's what I'm trying to prevent. If that makes sense. So, um, I got a long and a short playing the range. That's the short version of it. Short at the major level, and then a long at the major quarter. And